Hi everyone, Aussie Dollarman here. Welcome to the Forex Form Guide. Plenty to cover tonight. We're going to be looking at the FX majors through the lens of WD Gann analysis. We're going to be looking at a high reward to risk ratio trade, checking out the gold price, looking at a fast way to increase results in your trading or any aspect of your life, and plenty more. If you're new to the channel, welcome. Make sure you hit the subscribe button to keep up to date with my latest videos. In this episode, we're going to be looking at the Aussie dollar US dollar, the pound US dollar, the euro US dollar, and the US dollar Japanese yen. Before we do that, though, a very quick look at the gold price. Gold was in the news this week. I don't normally track gold, but I saw an article that gold hit $3,500, and it was attributed to President Trump and talking about how gold has rallied since Trump was elected. And while that's true, you can't argue with that. There's the April bar here. This is a monthly chart of gold. April, March, February, January back here, and then obviously November, this area here. That's where the US election happened. The trend for gold, this massive rise, actually started back here in March, April of 2024. And I want to point out two very important lessons from WD Gann here. The first is Gann says that the fourth time a market approaches a level, it almost always goes through. That's why we hear about double tops and triple tops, but not so often do we hear about quadruple tops, because the fourth time it usually goes through. Well, here on gold in 2020, we had a high there just through the 2000 level, and then again and again. And then the fourth time gold got up there, it pushed through, had a tiny pullback, and then bang, it shot off to the upside there. That's that fourth time through. It looked like a little false break here. That little false break couldn't hold. It just gave you a higher bottom, and then off you go to the upside. So the trend was in place there. That's number one. The fourth time a market gets to a level, it nearly always goes through. So that can give you trading opportunities as well. The second thing there that I want to point out from Gann is Gann says that the longer the period of time that happens before that top is taken out, the greater the move you can expect. This is not just a market taking out last week's top. This was 2024. We were taking out a top from 4 years previously. So you would have expected a strong move there. And on the monthly swing chart, one of your biggest swing charts that you're going to use, you can see a higher bottom there, and then a run up for, what's that, 2, 4, 6, 8 months. A little bit of a pullback, and then bang, off you go again. So the trend was up and strong before the election even happened. And my thoughts on that, based on my own experience and the teachings of Gann, is that the information is all contained in the chart. And here, the trend was up. And when news comes out, it tends to push the market in the direction of the trend more often than not. So it's no surprise that's gone up there. $3,500, it's come off a couple of $100 since then, but it is still very high. Looking at this market, is this a good time to buy gold? I don't think so. Now, for those who know me, gold is what I would call my enemy. Gann wrote a lesson in his first book called Truth of the Stock Tape about stocks that are your enemy. And he spoke about stocks that he could not make money in, and other stocks where he almost could not lose money in. Obviously, those were his friends. The ones he couldn't make money in were his enemies. Time and time again, I'm wrong on the price of gold. I did actually see this and say, once we've broken through here, gold is going to go up for a long time. So I guess that is one that I got right. But generally speaking, gold is not a market that I follow. I just thought it was an interesting example of two of Gann's lessons. The fourth time a market reaches a level, it almost always goes through. And the longer the period of time since that top, which, by the way, commentators looking at the market, they would be looking at the one day that it hit $3,500. They're not looking at a monthly chart going back 30 years here. They're only looking at today's market action. So they're not going to see, oh, it's crossing tops from 4 years ago. We have to be smarter than that. We have to be on top of our charts. So the longer the period of time since that top is broken, the further the move up that you would expect. All right, let's get into the Forex Form Guide for this week. Disclaimer, this video is for educational and informational purposes only and should not be considered financial investment or trading advice. All market commentary reflects my interpretation of WD Gann's work, particularly the tunnel through the air, and these are shared to illustrate historical market principles, not as actionable trading signals. Bottom line, do your own research. This is not financial advice. Trade responsibly. In case you missed it, two things here. Number one, in the foreword to the tunnel through the air, Gann talks about the importance of Robert Gordon's 7 days. And did you watch last week's episode all the way through to the end? And are you sure you watched it all the way through to the end? Those points are all linked, so I'll leave that for you to ponder. If you're interested in studying Tunnel Through the Air, I have recorded an audio version of the book. You can find it in a playlist on this channel so that you can study what is arguably Gann's most important work when you have spare time, maybe when you're in the car, on the train, on the plane, going for a walk, etc. Now, lastly, before we begin, I just want to take you through a very quick exercise, which I feel might be really helpful for your trading. Imagine you've just entered into a trade. A few days go past and the trade is moving your way, and then you bank a 16 to 1 return on risk on that trade. So let's say you were risking $100 on the trade and you made $1,600 on the trade. Are you happy with that result? Now, if you've been following the channel, you'll probably know which trade I'm referring to, but I want you to think about this for yourself, really. Would you be happy with that result? How do you feel with that? And then consider, what if the market keeps moving your way? Are you still happy? I took a 15 to 1 trade on the British pound and it unfolded in about 90 minutes. This was a few years back. Now, an announcement came out and the market raced to my profit target. Within 90 minutes of me taking the trade, I saw the big move. I knew that I had underestimated the size of the move, so I raced to move my profit target, but it had already been hit. Had I moved my profit target to where I thought it would go, my 15 to 1 trade would have been a 120 to 1 reward to risk ratio trade. Just doing nothing else. No compounding, no pyramiding, nothing. It would have been 120 to 1. So my point here is, for me, was I happy with the 15 to 1 trade that I took? Absolutely, I was happy. And if I wasn't happy with the 15 to 1, I should not have taken the trade, or I should not have put the profit target at that point when I took the trade. Similarly, with this trade, which we're going to look at briefly, a 16 to 1 return. It was actually a 20 to 1 for me. I'm just saying for you, the initial trade was 16 to 1. I added to the position. That's why I got a little bit more out of it. Was I happy with that? Absolutely. So here's the trade I was talking about. It's the double bottom trade from 2 weeks ago. And you can see, by the way, a little bit of technical analysis for you. There was the first bottom. When you get a second bottom on a double bottom, for me, I love it when the market just breaks that first bottom because there's a lot of orders underneath there. They all get cleaned out. And now we know, if that's not enough to push the market down, it's probably going to go the other way. Firstly, because there's no strength to the downside. Secondly, because people will realize, oh, there's no strength to the downside, so they'll jump in and go long as well. So if you're ready with a position like this was a 15-minute chart. If you're ready for that, you can place an order above there so that when the market turns back up, you can get on board really quickly. And that's what I did on this trade. It was a 22-point risk there on the 15-minute chart. Now, I set my profit targets. I talk more about that in the video. By the way, the video is called a double bottom on the Australian dollar, US dollar. I changed the thumbnail because I saw somewhere on YouTube, if you have a more interesting thumbnail, people tend to click on it more. And you can see the views are a lot higher compared to most of my other videos there. So that's apparently a more interesting thumbnail. Aussie dollar trade makes 16 to 1 in 2.5 days. But there you go. If you want to check out that trade, I did post it shortly after taking it. So obviously before it had happened. But that's an example of setting up a high reward to risk ratio trade. Speaking of YouTube videos, if you would like to support the channel, and my only intention with this channel is to help people who are on the Gann journey. If you're watching this video, chances are you're on the same Gann journey that I'm on, a search for knowledge, a search for trading profits and being the best trader that you can be and using Gann techniques to help you get there. I believe that if you give out help, you will receive help in return. If you would like to help the channel reach more people, there are 3 things that you can do. If you haven't already done so, you can hit the subscribe button. It doesn't cost anything. Second thing you can do is click on the like button. You can see 100 views on the video, 14 likes. I think I got more emails than the 14 likes saying how much they appreciated the video and the little nuggets that I hid in there for those who watched all the way through to the end, hint, hint. But if you would like to support the channel, click on the like button. If you liked it, I'm not begging for likes. And also drop a comment below as CoolCat2514 did 5 days ago. If you like and leave comments on videos, YouTube sees that as interaction with the video. People are enjoying the video, so it will share the video with more people. That's roughly how the algorithm works. So if you've got a moment, be brave, leave a comment. Even if you just say hello, I'd love to hear from you. If you've got a question, if you've got a comment, if you've got feedback, if you want to tell me you liked something, if you tell me you didn't like something that I've done in the video, all comments are appreciated and I will try and get back to all of them. All right, back to the example. So as I discussed in last week's episode, this is where I got in. That's where I added, and that's where I took a 20 to 1 profit. Since then, you can see the market just continued on its merry way. My thoughts were that the market would have a little bit of a pullback and that I would get long again from a new position there. Okay, so I took my profits expecting to get another position in down here. That hasn't happened. The market's been really strong, and we'll talk about that in a moment when we look at the Australian dollar. Now, dealing with the aftermath of all of that, as I said, I banked over 20 to 1 on the campaign. That's the initial entry plus the compounding. The Aussie dollar has since gone up and hit 6,439. That's 170 points past my target. That's a fair way. I've missed that by a fair way. Now, I was expecting the market to go higher. I just thought it would have more of a pullback first, so I thought I would take my profit, especially in these more volatile times. I thought I'll get out rather than sitting through a potentially deep pullback, and then I'll reset. That 170 points on my initial 22 points risk is an extra 7.7 to 1 reward to risk ratio. Does that bother me? Do I feel bad about it? The short answer is nope. That's it. Nope, I don't. I could talk for an hour. I could quote a dozen trading psychology books and money management and risk management books and go into all the theory and talk about different things we could have done. End of the day, I took a trade. I was happy with the trade when I placed it. Trade hit my target. I have no right to feel bad about that. My job as a trader is to be profitable, and that's your job as a trader as well. And if more traders realized that that was their job, there would be a much higher percentage of successful traders out there. Now, what is a profitable trader? My definition of a profitable trader is at the end of the trading year, it's the end of the 12 months, if you look at all your winners and all your losses, if you are at least $1 in profit, you are a profitable trader by definition. Now, some people will scoff at that and say, oh, I didn't get into this to make $1, but that's a fact. You're a profitable trader. I've seen statistics saying that more than half of traders lose money, and that's the conservative end. I've seen those figures go up to 90%. 90% of traders lose money. So depending on who you believe, I would say it's probably somewhere at least 75% of traders lose money. So if you can be a profitable trader, no matter how small, you're in the top tier of traders. And once you get there, you can build on that and you can gradually increase. Your job is not to blow it out of the park with every trade and capture every move up and every move down. I know some very, very good traders who know a lot more than me who don't capture every cent of the move and they don't stress about it either. You decide what profitable looks like, whether that's $100 a month, whether it's $1,000 a month, $1 million a month, but you work out what profitable is for you and what your goals are there. But my suggestion is don't try to capture it all. Be content with capturing enough. That's your first goal as a trader, to capture enough so that you can treat trading as a profession and build on it. If you go out there, you try and capture everything and you end up blowing up your account, well, you can't be a trader anymore. Okay, and your dream is over. So don't try and capture everything. Take your time, look for setups that make sense and have a good reward to risk ratio. Once you've back tested enough and you've proven that that knowledge is useful, then you can start looking at taking trades when they appear and managing your risk accordingly. Again, I gave some good advice on that in a little lesson called Smart Trades in last week's episode of the Forex Form Guide. If you missed that, make sure that you check that out. It's the Easter episode. All right, let's get into the Australian dollar, US dollar. When I go through the currency markets, this one page from Gann's second book called The Wall Street Stock Selector has such a profound impact on my way of looking at markets. As you can see on the page, Gann lined his charts up. Keep in mind, when you hear people on the news talking about the markets, they're generally talking about what has happened today, or at most what's happened this year in the market. Oh, the stock is up or down X number of dollars or X number of points year on year. What we need to do as traders, and what Gann was encouraging you to do, is to look at the big picture. Look at your big picture yearly trends. If your largest trend, in this case the yearly, but you may not use the yearly trends today, that's up to you. But if your largest trend is pointing up and strongly up, breaking a whole bunch of tops here, should you really be taking short trades? Probably not. Then you've got your monthly trend here. You've got a little higher bottom there pointing up. You've got your weekly setting up for a higher bottom there as well. You've got your daily approaching double tops. Now, does that look like double tops that are going to hold? Probably not, given the bigger picture trends there. But that's what I'm always doing. Now, in a moment, as you'll see, I don't look at yearly, monthly, weekly, and daily. I've dropped down a little bit there. I look at monthly, weekly, daily, and 4-hour initially, but I'll talk about that in a moment. Now, this is the starting point of all form reading, in my opinion. And as I've said previously, if you want to get into form reading, there's two sources that I recommend. Gann's book, How to Make Profits in Commodities, and Safety in the Markets Active Trader Program. So let's apply that Gann style chart to the Australian dollar. I like to look at it like this in a 4-way split screen. I did try 6 screens for a while. I found personally, and everyone's different, but I found personally that 6 screens was a little bit too much information, a little bit too noisy. I'm happy to look at this on the big picture. I've got my monthly on the left and my weekly on the right, and then daily at the bottom and 4-hour over here. Looking at the monthly chart, if you're a swing trader, you'll see we ran down and then we had an outside bar here. So this becomes a swing low. This becomes a potential swing top. And then if you were following the market, we actually ran down to this major low here, and then we've run up over there. So on the monthly chart, you're going to have a run down, a pullback, and then a run down here to a low. We've now taken out those tops there, so we're running up here. Now that to me looks like a false break of the 75% milestone at this point in time. Keep in mind, though, that when markets move down, they'll often, they'll break milestones and then they'll come back and they'll make lower tops under previous milestones. At 12.5 there, 37.5% there, around the 50% there, it just poked through a little bit. We're now sitting just around that 62.5% milestone. If the market is going down, well, that's not a bad place for it to go down. I'm leaning now towards this market going up. I think that we had our two bottoms here on 75%. We failed running down. We've had a nice, strong run up there. So far in this month of April, as we're approaching the end of April, the Aussie is trading near its high for the month, just underneath that 62.5% retracement there. So on the monthly chart alone, that's looking like a very strong push out of this April low. Moving across to the weekly chart, you can see that was actually a 200% rundown on the previous weekly downswing. So not a bad place to see the market pull up. However, the market's gone ballistic out of that 9 April low. Keeping in mind how sideways we've been all year, stuck in a couple of cent range, this has gone 5.5 cents basically from that low over the last 2 weeks. So a very, very strong run up there. And the reason that the Aussie dollar has gone up so strongly is we're in an updraft on the cycles. Basically, all of the cycles have been pointing up during this period. My major, my medium term, and my minor cycles all pointing up through this period here. We had a little bit of a pullback here where one or two of the cycles turned down briefly, but the big cycles are up and they are still pointing up. I don't think that's a final top there. I think that there's more to go there. Whether that's a weekly top or not remains to be seen. That's a massive run up. That's what Gann would call an overbalance in price, saying that the trend has turned to the upside there. The problem is, though, if you're not in this market at the moment, where do you get in long if you think it's going up? The market has run so far up, at some point it's going to have a pullback and come down. For me, I believe that the smarter trade is to wait for a pullback and a higher bottom and look for harmony or a trading setup around there. There's 4 kinds of trading setups that I look for. Double tops and bottoms are just one of those. The others you'll actually find in that safety in the market course that I mentioned on the previous slide there. But I'm looking for a higher bottom there. If and when we do start heading down into a higher bottom, I'll then look for a setup at that point there. But I think this market has more upside in it. It's just a question of, do we have a little bit more here now, or is this a weekly top and are we heading down? For me, I don't care. I'm not in it. I'm watching and I'm waiting to see what it does. So does it run up on Monday morning, or do we run down and do we start looking at these retracement levels to look for a low to come in the market? I've got my largest cycle on this market going up until the middle of May. So as I said, I'm not expecting anything just yet. That would be my next date for a potential monthly turn on this market. And we'll see where that market gets to. That will be interesting to see how high the Aussie can go in the next couple of weeks or so. We do have on the 3rd of May, next Saturday, we do have an election here in Australia. So that could have some interesting connotations for the Australian dollar as well. However, I'll be looking purely at the charts. At the moment, if we do have a down day on Monday, we've got a little daily lower top there. That would probably mean that the weekly swing is ended here. However, either way, whether it ends here or whether we go a little bit higher, I'm not looking to buy here. I think this is done. Yes, it may go higher. It may go another 100, 200, 300 points higher, but the bulk of that move is over, and the safest trade is to wait for that strong setup. Down here at the low on the 9th of April, we had all of those lows coming in on Gann's cycles, and we combined that with the form reading to give a nice, simple double bottom trade. That's one of the easiest trades that I have ever taken, and I've missed some trades this year. I'm not saying I'm some trading genius who never gets it wrong, but that was an easy trade for a Gann trader to take. And sometimes the market gives you gifts like that, and you just say thank you and you move on. Looking at the 4-hour chart, as I said, we're trying to work out, is this going to give us a little lower top there on the daily chart or not? Potentially some double bottoms there. It really has struggled to go down through here. So if we get a higher bottom here and we start heading higher, obviously some more upside there. And we'll have a look maybe early May for the next turning point on the Aussie dollar there. But again, big picture up. And when you've got a big picture as strong as this, that's not just going to turn around and crumble overnight in most cases. For example, we had a rundown from our September high last year. We've retraced half of that move in just a couple of weeks. And it took, what was that, October, November, December, January, February, March. It took 6.5 months to run down, and we've retraced that in 2 weeks. Retraced half of that in 2 weeks. That's a strong bounce. So if and when this top comes in, when you get a higher bottom there, that could be a good place to watch for another long opportunity on the Australian dollar. But bottom line is, at the moment, all signs are pointing up on the Australian dollar. I do still have September in mind for some really strong down moves in this market, but that's a long way away. All you can trade is what's in front of you. At the moment, what's in front of us is a very strong up market. Now, that's a monthly, weekly, daily, and 4-hour chart. A little bit different to Gann's yearly, monthly, weekly, daily, but I'm sure you'll agree life is a little bit faster than it was back in Gann's time, and markets move a lot more quickly. You could even drop that down to a weekly, daily, 4-hour, and 1-hour chart. I think this is a good mix, and when I'm looking for my trading signals, I normally find them on one of these 4 charts. When I find a setup that I'm ready for, and I don't have one at the moment on the Aussie dollar, but when I find a setup, then I drop down to my smaller set of 4 charts, and I've got my daily, my 4-hour, my 1-hour, and my 15-minute chart. Again, you might change that to just a 4-hour, 1-hour, 15-minute, and 5-minute, or 15-minute and 4-minute, or 15-minute and 1-minute chart, whatever you want to trade there. I don't have that at the moment, so I'm not interested in these charts at the moment. And there's another good tip for you. If you don't have a setup, forget about your little 1-minute, 5-minute, 15-minute charts, because you're going to be seeing movements all the time. There's so much noise on those smaller picture charts. Just forget about it. Go back to your bigger picture charts, and you can say, well, okay, we're either at a weekly top here, in which case we need it to run down and have a failed downswing, so I can't do anything about it, or there's still a bit more upside here, but I'm not interested in trading this because it's so far up, and my reward to risk isn't going to be there. So either way, I'm not doing anything. There's no point looking at another chart. Go for a walk, play a game of golf, watch a movie, catch up with a friend, or maybe read your Gann books. But don't spend the day looking at your 5-minute chart. You're not going to find the answer there. The answer is going to be on one of these charts here in most cases. All right, let's move on to the British pound now. Remember, I was looking for this market to potentially give us a top around the 131 level. Here on the weekly chart, you can see we smashed through that level to 132. We did have a decent pullback. Okay, so once it hit that level, it only went a little bit through there, and then it came back down. It was on the 1 day. It pushed through for a few hours. It's come back down, and we did have a 500-point sell-off. Okay, but since then the market has recovered and run up very strongly. Because of that, I believe this monthly top will be taken out. I don't think it's going to be a double top. It doesn't look or feel like a double top setup for me. What I think is, and you can see this on a number of the currency charts this week, I think we'll probably, wouldn't surprise me if we pull up a little before that and have a pullback, and then off we go to the upside. You can see, like the Aussie, we're setting up for a potential first lower top there on the daily chart. If we run down there, I've got my milestones here, maybe a 50%, 62.5% retracement there. Get a nice clean low. That would give us a weekly higher bottom, and then bang, off we go to the upside there. That actually looks like what's happening here on the 4-hour chart. See, there's your daily move to the downside, running down there. Then you had a little run up and another failed move down into this low here. Now you've gone run up there, pull back, and we're just sort of potentially looking at a little lower top there on the daily chart, maybe. We'll see what happens there. And as I said, around that 50% or 62, either of those looks pretty good to me for the market to pull back to. I just wanted to share quickly with you a thought that I had this week, and it's on the topic of being interested versus being committed. I have some questions for you. There's no right or wrong answer to this. I'm not judging you. Nobody is judging you. It's just something to think about. Are you interested in trading? Are you committed to trading? There's a big difference. Oh yeah, that looks interesting. So, wow, I'm committed. I want this for sure. Are you just interested? Are you committed? And are you interested in Gann's work, or are you committed to mastering Gann's work? Again, there's no right or wrong answer to this. I was discussing with a friend over lunch on Tuesday. We were talking about golf, and back a bit over 10 years ago, I've always loved playing golf. It's something I've been interested in. But in 2012, I was committed to golf. For about a 3-month period, I was getting lessons and going to the driving range every day. I was practicing in the backyard, practicing all the skills, and I really took my game a long way very quickly. From someone whose best score was 40-something over par, within a couple of months, I got my score down in a tournament actually, but I got my score down to 19 over par. That was a massive change for me from 40 over par, and I really started playing well because I became committed to that. Now, back then my golf course got flooded and it was out of action for 9 months, and I moved on to other things. And you're not going to be committed to the same thing for your whole lifetime. I've gone through many hobbies in life, which maybe because I'm a Sagittarian. I like to learn. I like exploring and learning different things. But for me, I was committed for a period. But while I was committed, my results went up. That's the benefit of commitment there. Now, what's my point with all of this? This is a chart that I was shown in a seminar. There was a research project undertaken by a guy called Gary McPherson, where he looked at, I think it was violin players, piano or violin, but he looked at musicians and he looked at their results and how they performed on tests and this Watkins-Farnham performance scale. And he looked at two different variables. So he looked at students who put in a low, moderate, or high amount of practice each week. So low was 20 minutes, one 20-minute session a week. Moderate was practicing 45 minutes a week, and high was practicing for 90 minutes a week. So looking at the students putting in more practice. And then he also looked at how committed they were. So the blue line here represents students with a short-term commitment. And these are students who were just doing a musical instrument until the end of the year. Maybe they had to do it for school or whatnot, but they just thought, yeah, I'm just doing this till the end of the year. Then they had medium-term committed students. So students who said, oh yeah, I'm going to do this instrument until I finish school. And then they looked at long-term commitment, where they had students who were planning a career in music. They were committed to their music. Now, here are some interesting results that came out of all of the testing. Firstly, look at the three groups here. All of these students here with these results, they're all putting in just 20 minutes of practice a week. The blue line here, they're only short-term committed. The gray line here is much, much higher, probably about a 50% higher result for the same amount of practice. What's the difference between the students? The gray line are committed. They see themselves as long-term committed as professional musicians in future. This is scientific proof of the power of belief and having a vision of where you're going with this stuff. The same amount of practice. Now, isn't it interesting? This student here, or this group of students with short-term commitment, they can practice 90 minutes a week. That's 4.5 times as much as these students over here. Okay, they're practicing a lot more, and they're still not getting the same results as a committed student practicing once a week. Think about that for a moment, that idea of commitment and that vision of where you see yourself going with all of this stuff. It's really, really important. And the final thing there, of course, is practicing 3 times a week. It doesn't mean all that much if you're not committed in the long term. If this is just oh yeah, I'll do trading for a little while till I make some money and then I'll move on to something else, it kind of doesn't work out that way for you. But if you see yourself as someone who is committed to this, and again, there's no right or wrong answer. There are so many things today that are demanding your attention. For me, obviously I've got my relationship with my wife. I've got my relationship with my children. I've got family members, I've got friends all wanting my time. I've got things that I'm interested in. I'm interested in Gann. I'm interested in trading. I'm interested in some sports, not as many as I used to. I used to follow a lot of sports. These days, I just don't have time for it. I barely watch TV or movies anymore. There's just not enough time. So I'm not saying, oh, you must pick one thing and commit to it. I'm just saying, think about this. What's important to you? For me, I'm committed to understanding Gann's systems at the highest level and replicating some of the things that Gann could do. I'm also committed to my relationship, and I'm committed to my children as well. So I have to balance that as well. That doesn't leave a lot of time for a lot of other things. But my point that I'm making here is, if you want to increase your results, one thing you can do is practice 3 or 4 times as much, put 3 or 4 times as much time into it. But look at the improvement benefit that you get there, just a little bit. Or if you start saying, no, I'm committed to this and I'm going to see this through to the end. A mentor of mine uses the acronym FOCUS, follow one course until successful. If you're going to see this through to the end, make that commitment. And then all of a sudden, even if you're only practicing the same amount of time, you're getting a lot more bang for your time basically there. And from that point of commitment, if you go to a high level of practice, that's where you see the big increases there. And that's when things start to make sense. And part of it is just your brain recognizing importance. Your brain, my brain will say, oh, Aussie Dollarman loves his trading, loves his Gann. This is important. I better pay attention. He's going another seminar, not another Gann seminar, not another Gann mentor, not another Gann book. But there you go. And the brain thinks it's important. And that's how you make progress there. For me, I got into trading and I thought I'm going to make a quick $1 million and then retire and do nothing for the rest of my life, which obviously not a very good life plan. But as I got into this stuff and I realized, wow, there's so much to learn here. I love this stuff. I'm really interested in this stuff. The money is great and it continues to be great, but there's more to it as well. There's deeper level stuff as well that I want to get to. And as I said, part of that is why I'm running this YouTube stuff, helping, because I want to get to the highest levels, and helping is a way for me to get help as well. And also I've met some fantastic people. I've been reacquainted with some old friends on the YouTube channel. It's amazing how people can just find you out of the blue. And I've also met some fantastic new friends as well. So it's been terrific. But bottom line, if you want to see massive improvement, think about what you're committed to and commit to it and see the results take off from there. Let's move on to the euro US dollar now. Similar pattern to the pound. It was setting up for a lower top on the monthly chart there, but it's actually shot up in these last couple of months, March and then April. It's burst through all these tops back here. Not the same as the gold chart that we saw earlier today. This was July 2023, so not even 2 years ago, but it is still a couple of major monthly tops there that we have broken. And as of this recording, I'm recording this on the 26th of April, we are closing above those highs there. And you can see the weekly swing chart. It's an expanding range to the upside. It's showing strength to the upside there. The euro is looking quite strong. On a daily chart here, not quite the same pattern as the British pound, where we were setting up for a potential little lower top there on the daily chart. Those are equal tops there, so not enough to swing the chart up there. Over here on the 4-hour chart, if you run a trend line through there, we're still below that trend line, but it's pretty close. So it doesn't need to do much to get above that trend line. Normally, when you break that trend line from the top to the first lower top there, the markets do tend to push up through there and keep going. So it's looking pretty strong on the euro. Same story with the Australian dollar, though. It's gone up so far. At some point, it is going to have a pullback. Now, we may have a big up week this week, but at some point, it is going to have that pullback. And when you get that pullback, often, and this is in my experience, often at the pullbacks, those first high bottom, first lower top trades, which Gann said were the safer areas to trade. Here on the euro, obviously, it's not the first higher bottom. It would be a first higher weekly bottom on the Australian chart. But we've had a few weekly higher bottoms here. But often those retracements are where you're going to get your best bang for your buck on the trade. So don't be in a panic. Don't think, oh, the euro's broken through. I better jump in. I'm going to miss out on this move, because the euro could have a pullback here. You know, big monthly swing up here. It's an overbalance in price, but we could have a pullback, 2, 3, 4, 5, 600 points, and the trend can still be intact, but you're down 2, 3, 4, 506 points. It's not worth it. A mentor of mine, as I said, I've had many mentors over the years. A mentor of mine, David Bowden, who was the founder of Safety in the Market, he had a great saying. He was saying he would rather be out of the market wishing he was in than to be in the market wishing he was out. And in this case, I'm sure you can imagine, don't worry about not being in this move if you're not in. I know some traders who are in here who got long earlier in the year off this higher bottom here, and that's fantastic. I'm not one of them on the euro. I mainly focus on the Australian dollar for this Forex Form guide. I do look at the other majors. In my trading, though, it's mainly the Australian dollar, so I'm not in this one on the euro. But if I was looking to come in and trade the euro, that monthly swing has gone a long way. Could it go another 2, 3, 4, 5, 600 points? Absolutely. But at some point, as you can see here, it will have a pullback. Probably first on the weekly chart. We'll see how big that weekly chart pullback is. If we get a big overbalance on the weekly chart, that's probably the end of the monthly chart there. You'll see through the form reading lessons, and I mentioned that earlier, how to make profits in commodities or Safety in the Markets Active Trader program. In the form reading lessons, a lot of the time, there's two things you're doing. Number one, you're trying to call the exact culmination points of these moves, but sometimes you can't see that. It just happens and you miss it. So then you're looking at those signals from the market, such as a signal bar or such as an overbalance in price. So the downside, we have a big pullback down there, and then a lower top on the weekly chart, and then that signifies the end, in most cases, of the monthly swing up there. On the daily chart, a little bit sideways through there. It hasn't done all that much since running up back here on the 11th of April. It's been fairly sideways there. Generally speaking, when a market is going to put in a big top, you'll see a bit more volatility running up into it, and then you'll see a sharper sell-off there. The fact we haven't really seen that means I don't think that's a top there. But hey, if it is a top and I've missed it, you look at your weekly chart, you run your ranges resistance card over there, and you start looking at piecing the market together and seeing where that market low may come in and whether that's looking like another higher bottom and time to go up. As I said in last week's episode when I spoke about smart trades, SMART, and the fourth one there, reading the market or form reading the market, you're always reading the market and you're looking at it. Is the trend up? Is the trend down? On what time frame? And you're looking at multiple time frames and judging strength and weakness on multiple time frames. An interesting chart, I thought, on the longer term euro chart. This is coming from the 2008 all-time high on the euro. You can run some trend lines down to the lower tops, and you can do that for yourself. You run from this low here, which was in 2014, and that picks up this low here. That's not uncommon for a market to break above the trend line, then come and sit right on that trend line there. I'm looking at this. This is a market that could have some legs in it. This could have a really strong move here. I would say at least that 50% level, if not the 62.5% level for its next stop. Now, this is on a monthly chart. You're probably looking into next year before it's going to hit, say, that 136 level, but I'm looking at big moves there on this market. So, hey, if you've missed a low there, you can keep an eye on it. And then when you do at some point see a pullback, maybe a nice 50% retracement there, you can keep the big picture chart in mind as well. Again, this is why it's so important to be looking at all of your time frames. You don't just focus on a 5-minute chart or a 15-minute chart. You miss all the nuance and all the signals the market's giving you on those bigger picture charts. Let's move on to the US dollar yen now. As you can see, this last couple of months as we've been following it, we had that little lower top there. Potentially that could have been a little higher bottom there, but it's just gently sold off, and it's just really started to pick up some steam in the last couple of weeks or so. We've come down to these lows here. Notice that we haven't quite touched that last low. We've just pulled up just short of that low there. The market's put in what looks like a strong week in isolation there. When I see that though, for me, it's very rare to get a double bottom like this. Hey, drop a comment below if you can think of an example where this did work, but it's very rare to see a double bottom, a strong double bottom where the market shoots off to the upside, where it's just above that first low. In my experience on the currencies, it tends to touch and then just exceed that level before turning around and shooting up if it is going to false break. So I don't think that's a final low there from last week on the US dollar yen. I think that there is more downside to come, and this market could go a long way. It wouldn't surprise me if we go down to that 75% milestone there on the end around that 116 level, maybe even further as well. We'll see what happens with that. Very, very interesting times on the currency markets at the moment. Are we going to get a strong rally here? First, as I said, I don't think so based on the bigger picture. Looking at the daily chart here, yes, we've had one day up, a little inside bar, another day up there. We had a number of down days there. At some point, it was always going to have a pullback. And that's always my concern when you see so many days down there, such a large move down there. At some point, it is going to have a pullback. So many traders will say they'll miss the move, they'll miss it, and then it starts, it's sideways, and then they look at this and they say, oh, it's broken these three lows here, I'm going to jump in short, and then they get caught as the market turns around and clips them out there. You've got to look at the swings and say, well, where am I in this swing compared to the last swing? So, well, it's actually gone a long way down. We are due for a pullback. This is more likely to be a false break than anything else, and that's what happened there on this market. So it wouldn't surprise me if we see a higher bottom at some stage and a little bit of a push up. But I think that level's going to get broken. I think we're going further down. As I said, possibly as low as 116 there in the medium term. Quick look at Forex Factory for the economic calendar. Wednesday, the 30th of April. Obviously, we've got the CPI figures coming out here in Australia. Some Chinese manufacturing figures and German preliminary CPI figures. And then on Wednesday evening, you've got the US non-farm employment change and Canadian GDP, as well as advanced GDP for the US. And employment cost index quarter on quarter. So all these red bars here, which may have a high impact on currency prices. I've actually got the 29th to the 30th of April as one of my smaller term cycle dates. So I will be looking around this time to see the position of the market and see whether a trade may be on offer. If we go across to Thursday, the 1st of May, you've got some Bank of Japan policy rate and policy statement stuff and outlook coming out, and a press conference. And then later in the evening, Sydney time, you've got US unemployment claims and manufacturing. And then on Friday night, you've got the average hourly earnings, non-farm employment and unemployment rate in the US. And of course, on Saturday, we have parliamentary elections between two of the most outstanding candidates I have ever seen in Australia. No, I'm only joking. We've got two parties and two politicians that I don't think anyone is all that excited about. That's all for this week's episode of the Forex Form Guide. I hope you enjoyed it. I'd love it if you leave a comment below. Any questions, comments, feedback, I'll gladly take all of it on board. Until next time, I hope you have a fantastic week, both in life and in your trading. And I'll see you next Sunday, 7 p.m. Sydney time for the next episode of the Forex Form Guide. Until then, all the best and bye for now. Now, if you're one of those clever people who found the post-credit scene last week and you're waiting for this week's post-credit scene, this is it. There's no post-credit scene, but I just wanted to say you're awesome, and I commend you on your commitment and on your detective work. In trading, any clue that you can get is valid and valuable and important, and by hanging around here, it's the right attitude to have. I don't have a reward for you this time, but just a pat on the back and say, well done, you're on the right track, you're doing the right stuff. Best of luck, bye for now.